What's up, trading bros and sisters? Welcome to Trading Floor. I'm Wildcard, that's TB, and today gold told us what it already knew.
Three markets, three completely different bets. Oil is trading the peace. Gold is trading the dollar. II is trading like the war doesn't exist. And the VIX says somebody knows which one is wrong.
Quick reminder, nothing we say is financial advice. We're two guys reading the tape, not your financial advisor. Do your own homework. The 14-point memo dropped May 6th. The United States wants 20 years of no enrichment from Iran. Iran wants 5. That is not a negotiation. That's two countries who can't agree on what a deal even is.
The gap isn't a detail. You can't split the difference between 20 years and 5. That's a diplomatic fiction.
Trump is calling this a skirmish and comparing it to Venezuela. Brother, there are mines in the Strait of Hormuz, and Lufthansa axed 20,000 jobs. Airlines burned $5 billion in fuel in March alone, just on reroutes. Venezuela, this is not.
Gold at $4,744 and climbing while oil dips. That's smart money saying don't buy the resolution.
If peace was real and Hormuz opens tomorrow, oil runs and gold pulls back. The exact opposite is happening right now.
Because oil and gold are pricing two completely different questions. Oil is asking, does Hormuz reopen? That's a supply question. Gold is asking, does the dollar hold its reserve status through sanctions, relief, flooding, non-dollar channels? Different bet. Different timeline.
Retail is treating them like the same trade. They're not even close.
China reversed its own sanctions guidance in 4 days. 4 days. Beijing is scared the May 12th summit goes badly. The leverage the market assumed Beijing had over this process? Less of it than anyone priced.
Trump, XI, on May 12th. Real deadline. Artificial urgency baked right into the calendar.
When summits create urgency, markets price the resolution before it exists. When the resolution doesn't come, there is nothing underneath to catch the drop.
Now let me hit you with the Shell thing, because this one genuinely broke my brain. Shell beat earnings. Crushed it. You know why? The war turbo charged their trading desk. Active conflict means volatile spreads, and Shell's traders feast on that.
Ending hostilities is structurally bad for Shell's next quarter. The headline and the reality are pointing opposite directions.
They win because of the chaos. Calm removes the chaos. That's a real problem for their guidance.
Saudi Wealth Fund is selling dollar-denominated bonds right now, raising capital in the middle of a supposed peace process. That's financing for a long siege posture, not a victory lap.
Maersk's chief executive says the shipping impact is bigger than people are pricing. The Pentagon says 6 months minimum just to clear the mines from the strait. The physical world does not snap back from a memo.
Insurance markets don't reprice overnight. Rerouting infrastructure takes months to unwind. The physical timeline and the diplomatic timeline are completely out of sync.
And nobody wants to say this out loud. Israeli strikes are hitting Beirut right now, while they're writing peace frameworks. The war is widening, not narrowing.
Active kinetic conflict, expanding while diplomatic frameworks are being drafted. Let that contradiction sit for a second.
Gold called the dollar story. Oil is trading headlines. We trust gold here.
All right, moving to the III hardware story, and this one just got complicated. ARM Holdings, ticker ARM, beat both lines. $1.49 billion in revenue. 60 cents earnings per share. Dropped 8% after hours. $8 gone on a beat. The market said, we believe the past. Show us 27.
3 years of 20% plus growth means the bar is impossibly high now. You don't get credit for beating anymore. You have to prove the next chapter exists.
ARM is the sell the news signal for the entire II hardware stack. Not just ARM specifically. The whole stack is on notice now.
Meanwhile, advanced micro devices ran 18% in a single session. Biggest semi move of the year. Data center II revenue was the specific catalyst.
Same sector. Completely different trade. The rotation isn't from NVIDIA to all semiconductors. The move is from GPU narrative king into II data center infrastructure.
Consumer hardware, smartphones, Internet of Things, is getting crushed by the same inflation killing Main Street. That part of the sector is not participating. Micron Technology, ticker. Micron broke through $658 on data center memory demand. I had 650 as the coil level. It printed. Saying it once and moving on.
That call was clean.
Tonight is the real verdict, though. Coreweave reports after the bell. Same question arm just failed to answer. Can you show visible, growing, sustainable II revenue, not just demand? The whole sector is waiting on this one report.
SoftBank rallied 18% in Japan today. ARM itself dropped 7.6% after hours. Tokyo rallied on the II narrative before the after hours print hit. That's a time zone arbitrage.
Watch Japan's open tonight. That SoftBank move might have a very hard morning.
The bull case is still real, though. Anthropic revenue is up 80 times year over year. SpaceX just signed a compute deal. Elon's company selling compute capacity to an OpenAI competitor because demand is that extreme.
Oracle and Meta in talks for a $20 billion deal. Nikki hitting records. This is the II capex floor, not the ceiling. The rally is going global.
The bull case and the fragility case can both be true simultaneously. That's the part retail keeps collapsing into one.
Systems check, real fast. TF. T sitting at $112,000, 98% cash, 1 share of Amazon. I'm watching and waiting.
Wave Trader has 5 positions open. One runner doing its job. Are in the grinder. Systems being selective right now.
VIX up on a green day. That's not noise. That's someone big buying puts while the headlines say everything is fine.
The VIX rate of change is at 0.6 right now. Not panic. Not a structural break. That's smart institutions quietly accumulating tail protection while riding the rally.
Tom Lee called 7,300 on the S&P. It hit. The man nailed the target. Now he's warning 15 to 20% drawdown, mid-2026, new Fed chair, oil disruption. When the guy who was right starts warning you, you don't ignore that.
Commodity trading advisors and ETF inflows are driving the parabolic price action right now. That's momentum money, not conviction money. Goldman confirmed pensions are selling into this rally. Fast money buying, slow money selling, someone quietly building, puts in the background. That's the picture right now.
That's the setup nobody wants to name out loud on a green day.
When fast money reverses, there is no institutional bid underneath to catch it. The downside is deeper than the VIX implies. Structural fragility disguised as strength.
VIX is whispering what the S&P won't say out loud.
The rally is real. The conviction isn't.
Before we close, Ryan Cohen tried to buy eBay. Using eBay. Got his account suspended. Bro tried to fund a $56 billion acquisition by listing stuff through his own eBay account. DFV the cat would never.
The account suspension might be the most expensive terms of service violation in corporate history.
All right. Here's what we're watching. McDonald's drops pre-market this morning. Same-store sales is your consumer floor test. Is the average American still spending? We find out today.
Coreweave tonight after the bell. II infrastructure verdict. If they answered the sustainability question ARM couldn't, the whole sector gets a new floor to build from.
Coinbase tonight. That's your crypto risk appetite red. Coinbase healthy means risk is on. They disappoint. Watch the whole speculative stack.
Friday, Anglo Gold reports. If the gold thesis holds through Friday, the miners become the leveraged play on everything we said today.
Gold at 4,744 and climbing. Oil softening while the memo crumbles. VIX whispering on a green day. The market reads the headlines. Gold reads the room. See you tomorrow, trading floor.